Hi, I'm Dawn Beltrami from Wazell Properties.
And I'm Andrew Steinbrecher, Sales Manager, Senior Loan Officer with Academy Mortgage.
And Andrew is going to be answering hopefully all of your questions on how to get pre-approved for a loan and the steps that you need to take. And if he doesn't answer all your questions, his contact information will follow and you guys can call him and ask him anything that you'd like. Is that right?
Absolutely.
Okay, great. Our first question is the question that's on everybody's mind. Andrew, where are the rates heading?
So Don, that's a great question, and I get asked this question a lot. And so we look at the trend, and the trend has undeniably been up, right? But people need to understand, what are the main drivers of rates these days. So what most people don't understand is that interest rates are determined in the mortgage-backed securities market, right?
Okay.
And so there's a couple of things that can drive that. So if we have an economy that's booming, right, the mortgage-backed securities market, which acts very much like a bond market, money will tend to flow out of that market and into equities,
Okay.
right? So the stock market
Right.
creates a supply in the mortgage-backed securities market, and that has a tendency to push rates up. Another thought is that the Fed raising the rates,
Right.
The short-term rates or the rate at which other banks borrow money from each other. Technically, there's no link between mortgage rates and the federal fund rate. However, there is the perception, and the perception is that they're increasing the cost of borrowing, and that tends to make investors behave in ways that will also increase the cost of borrowing in other parts of the economy,
Okay.
like the mortgage market.
Right. So do you think the feds are going to increase rates? What's your gut?
So the Fed is increasing rates for the most part due to controlling one of the things, the money supply, right?
Right.
As inflationary pressures build or as the economy gets superheated, moves too fast, they want to slow things down or
Right.
keep prices, down. So chances are that as the economy keeps building steam, they will raise rates, but there really is just no way to tell. Like
Okay.
I said, there is that correlation between the better an economy does, the higher the mortgage
higher the
rates
interest rates.
would do.
But for you and I, 5% or 5.5% is not a high interest rate because we come back from the days when 9 was a high interest rate.
Absolutely, and people also don't realize that a lot of the low rates from past years
Right.
were due to strategies, again with the Fed, something called quantitative easing, where they were actually buying the mortgage-backed securities, holding rates down. I think what we're seeing now is less of that kind of activity. We're going to come to some equilibrium. We just don't know where it is.
Okay, well, great. So it's still a good time to buy a house. Buyers should not be afraid of getting out there into the buyer's market.
I think buying a house is always a good time. Really, rates are subjective. I mean,
Okay.
the whole industry moves together.
Right.
Rates will be the rates. Buying a home is always going to be a good investment.
Great. So my niche market really is first-time home buyers. So as a first-time home buyer, I get asked all the time, what type of deals are out there for me as a first-time home buyer?
Right, and that's a loaded question. There's lots of different programs for first-time home buyers. And so at Academy, we are happy to say that we address almost all of the
Okay.
programs that are available, at least in Texas, whether it's TSHAC or TDHCA or SETH or SETH Gold Star or specific county down payment assistance programs. We are happy to be able to offer all those programs. Each program is unique in its requirements, and so one program is not the best fit for everybody. And so being able to offer so many different programs allows us to really make sure that we can offer the best product that fits the need for that particular client.
Okay. And there's certain requirements that you have to be subject to be approved for those special loans. Is
Right.
that correct?
So most down payment assistance programs have some kind of credit score minimum. Generally, it's 620 is the base.
Okay.
But from there, you obviously have income requirements. You can't earn too much money to take advantage of a down payment assistance program. But again, each program has different categories. Some have higher credit score requirements, some have higher income requirements,
Okay.
or lower income requirements. So it's a matter of just what fits best for that client.
Okay, perfect. And how can they lock in a low rate? What does a buyer have to do to lock in that low rate?
So I get this a lot too. How do I lock in the lowest rate? And I think a low rate cannot be talked about independently. I think it has to be talked about in terms of service as well. So I want to handle each one of these sort of independently. So first of all, making sure you're dealing with a company that's sufficiently large.
Okay.
Right? Academy is one of the top 10 in the nation in terms of overall size of private mortgage bank. So that's really important to have a big footprint. Smaller mortgage companies could tend to maybe need to earn more profit per loan. And one of the ways they do that is to charge a slightly higher interest rate. And so having a large company. Service is also critical to this locking a low rate because a low rate doesn't matter if that company can't close the loan.
Right.
So what people don't often see is the other side of that. I'm being pre-approved with this rate, and that's the seller side. So you got to think about when somebody has an offer in a house with an approval letter from Bank A, somebody comes with Bank B. Even if Bank B is maybe not as competitive, they're going to look to the service of that bank. They're going to see, does that bank have a high probability of closing loans on time? Do they offer good service?
Right.
The seller's agents can make decisions based on that. It's often not talked about, but it's true.
Right.
So if you're working with a company, just because you got the lowest rate, that doesn't necessarily mean you're going to get the offer.
Get it. Okay, to get it in. And how far into the loan process is the rate locked, or is there a formula that's used for that? So
there is no formula to locking a rate. Generally speaking, the longer the lock, the more risk it is for a bank, the higher the rate.
Okay.
So you tend to start looking at locking rates when you're within 45 to 30 days of closing. My recommendation is never to wait to lock a rate. It's called floating. There's the downside of that is that rates could go up. You're not locked, you're not protected. So my advice to a client is if they're comfortable with the payment and we're within a reasonable amount of closing, 30 days, locking the rate is always the best idea.
Okay, perfect. That's even good for me to know because actually I would have thought maybe you would wait to see if the rates are going down or they're going up, kind of playing that game, but that's a really good point.
Right, and like I said, doing that kind of strategy, it would have to be on the client to make sure that they fully understand that that is a double-edged sword.
Right, there is definitely a risk in doing that. Okay. So someone that does not have any experience in buying a home, how would you best explain what it takes to get started?
So there's really three critical pillars on a successful mortgage transaction. The first of which being income, right? You have to be able to show that you're earning enough income to be able to repay that loan. So income is the basis which determines how much you can afford, also called your debt to income ratio. We look at a lot of things. Income can be a lot of things. A lot of people don't know income can be retirement income. It can be Social Security. It can be rental income from investment properties. It can be child support or spousal maintenance. Anything that we can prove that has a reasonable continuance of at least 3 years can be income. So that's really first and foremost is income. The second is assets, right? I get a lot of people with no assets that want to buy a home, but the truth is you do need some money to make a transaction successful. Right. And assets can be, obviously your checking and savings. They can be your 401k. Right. They can actually even be a gift from relatives or close friends. And so there's a lot of things that we can do to help with assets. It can also be down payment assistance. Right? We're going to talk a little bit probably more about those programs. But then there's credit, and most people think credit's the most important, but the reality is you don't have to have super stellar credit. We start qualifying our FHA loans at a minimum mid credit score of 580, and that's pretty low. Yeah, that is. So don't let credit, be why you're not trying to figure out how to buy a home.
So if you have low credit, but you maybe have a good income or you're able to have some assets, that's going to make your loan process maybe possibly better.
Right. So
to get approved.
You need all three: income, assets, and credit. But income being the most important, and credit the least. Yep,
perfect.
Absolutely.
Okay, because I would have always thought the same thing. The credit is the most important thing, and then of course the money to pay for the loan, which would be. So I would have thought the first two would have been your credit score and your income.
Well, credit is an expression of risk, and so it's worth pointing out that as your credit is lower, it presents more risk for a bank, and so there is a correlation between credit scores and rate. Okay. So the higher the credit, the more competitive the rate, the lower the credit, and so forth.
Okay. What is the minimum amount of money that is needed to buy a home?
So this is a great question, and I think it's often one of those things that gives people pause. You know, I need to have a ton of money.
Yep.
And the truth is you don't.
Right.
You need to have enough money to cover some of the incidentals that come up front with making an offer. You know, one of them is earnest money, right? When you're making an offer on a contract, that's usually 1% of that purchase price.
1%, correct.
So,
that's what most agents are going to expect from you.
Right, right. And then there's, you know, maybe you want to have that home inspected, so there's a cost there, and then appraisal.
What does appraisal typically cost?
So appraisal depends on the property type. So a regular single-family residence, we're probably on average about $495.
Okay.
But if investment property and we have to do other things, you know,
It could be a little higher.
it could definitely be higher.
Okay.
If it's a multiplex, you know, so
Right.
forth and so on. I've lost my train of thought. Sorry.
No, and do you also have to do the appraisal, and you don't do the survey, that's done through title?
Well, so a survey is certainly, because Texas is a survey state, it is absolutely required a final survey on any purchase
Right.
transaction. Ideally, because we are a survey state, the seller may already have that survey,
Right.
and we can use that almost always,
Okay.
unless something's done to sort of change the footprint of that property,
Right.
in which a new survey may be required.
Okay.
Um,
And that's usually anywhere between $350 to $500, depending upon the property.
Right.
Obviously, if it's acreage and it's larger, it's going to be more. But typically, for a single-family home, we're talking anywhere between $350
we
and
estimate
$500.
$350 if a
Yeah,
survey is required.
Exactly. Okay. And what do you see as the biggest misconception that potential home buyers have that may be preventing them from buying a home?
And this is going to go back to the last question, and that is, you know, that they need some enormous amount of money. And so I'd just like to give an example, actually. Last week, I closed a purchase transaction for a client. It was a $250,000 home,
Okay.
right? And they were able to negotiate a really solid purchase contract. And
Okay.
what I mean by that is you're negotiating with the seller for certain concessions, because
Right.
the seller can give back.
Exactly.
And that amount depends on what loan type it is, right? For FHA, it could be up to 6% seller
Right.
concession, and this is of the purchase price. For, you know, a conventional, it could be 3% and so
Right.
forth and so on. But if you're able to negotiate a contract like that, and we combine it with, you know, a down payment assistance program, then, you know, we can have somebody close for, and in this case, it was a $250,000 purchase. They put $1,000 down for earnest money, actually.
Okay. Wow.
We didn't have to have the final survey because the builder paid for that.
Okay.
$495 appraisal.
Okay.
With the down payment, with a good negotiated contract, you know what their cash to close was?
What?
$209.
Wow.
I know, it was amazing.
Wow.
So
That's
so
amazing. That totally, I don't think people are expecting that.
Just over $1,700.
We just did a deal together with a VA loan,
Absolutely.
and he even got money back.
He did, right?
Right.
Because again, a very well negotiated contract
Yes.
can put people in a position to really not have to invest very much at all.
Right.
It just has to be part of the broader goal.
Exactly. Yeah, and I found that amazing, and I know that my client was just like, "This is so cool. I'm getting a check back."
Yeah,
you
it
know,
happens
so
a lot
yeah,
more than people think.
yeah, exactly. So, when is the right time to apply for a mortgage?
And so that's a great question as well. I mean, I think that there is this tendency where I'm just going to apply for that mortgage right before I want to buy a house. That is absolutely the wrong thing to do.
I so agree. As the agent, I so agree
Yeah,
with that.
Exactly, because it doesn't matter, right, what your time frame is. I'm going to buy in 1 month, I'm going to buy in 6 months, 8 months, 1 year. The most important thing to do is apply, because that's where you're going to identify not only what you can be approved for,
Right.
but if you cannot be approved, what steps you can take to make sure that you can be approved so that it's all part of your goal. So really, the sooner the better with a mortgage application. You know, the approvals can last up to 160, 120 days or more.
Okay.
And so it's really important to get that part of it done as soon
Okay.
as possible.
So this is a question that I always get, and the question is, how many points against my FICO does that inquiry go against it to lower my score, and how many times can I get pre-approved from different mortgage companies to find the best rate before it really starts to affect my FICO score,
And so this
which is your credit score?
right. And so this is a great question as well. And so first and foremost, there is a difference between Credit Karma. There is a difference between what a car dealership might pull as a credit score.
Okay.
Mortgage companies are required to use very specific credit models, and they're set forth by Fannie Mae, Freddie Mac. These are the models to generate FICO scores.
Okay.
And actually, a mortgage company pulling a credit score does not technically lower your credit score. if you're using some kind of consumer-facing software that doesn't understand how to differentiate that inquiry between a credit card
Right.
or a car, which are very negative inquiries on credit,
Okay.
and those do real damage to your credit scores, then if you're using that technology, then it may show you that your credit score is going, when actually it's really not. And the reason
Okay.
is this. Say if you go to mortgage company A, and then, you're shopping as a
Right.
consumer, you want to be able to go to mortgage company B or even C.
Right.
Maybe 3 lenders, tops, right?
Okay.
Is probably the max I'd recommend. But if you were to go to mortgage company A, and mortgages are credit-based, right? The lower the FICO, the higher the rate.
Right.
And then you were to go to mortgage company B, and somehow mortgage company B was to pull a lower credit score because you already went to mortgage company A,
Okay.
and we had more competitive, but for some reason it was lower now, so we can't offer a more competitive. That's why
Okay.
it doesn't lower the FICO score when you do that.
Okay.
So
Okay.
it treats these inquiries as the same,
Okay.
and there is really technically no change to the FICO score.
Is there a time limit though that you have? Like I had heard in the past that you have like 14 days to do that for it not to affect your credit score. But if I was to go to mortgage company A now, mortgage company B now, and then 3 weeks from now I go to another 2 mortgage companies, does that then lower the FICO score or?
So again, that type of inquiry is not really negative on a
Okay.
FICO score. However, for it to be all treated as one inquiry, I think generally the activity, as long as it's within a month,
Okay. Okay.
then it's all treated as the same.
Okay.
But you should be able to, I think, understand that what direction you're going to go once
Right.
you consider three different
Right.
companies.
Yeah.
But things that do affect credit are obviously, like I said, credit cards, automobiles,
Right.
anything derogatory, will affect the credit.
Well, thank you, Andrew, so much for
Sure, my
sitting down
pleasure.
with us and asking some questions, because I think this is questions that everybody has, even myself. A lot of times I have my buyers ask me these same questions, and I'm like, listen, I'm a real estate agent expert. I am not a mortgage expert. You got to talk to Andrew. He'll explain it all to you, and he's there to answer all your questions. So if you do have any questions for Andrew, we will be putting his contact information below on this video. Please feel free to call him. And if you have any questions in reference to getting yourself pre-approved so that you can start looking at properties, please don't hesitate to give me a call, and I'll be more than happy to help you. Thank you for joining me, Dawn Beltrami from Roselle Properties, and Andrew Steinbrecher from Academy Mortgage, answering hopefully all of your buyers' questions for getting pre-approved for your loans.
Great. Thank you very much.
Thank
Appreciate
you.
it. You bet.
Appreciate it.